You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, and welcome to Infinite Banking Mastery. Before I get started on the topic of term insurance and whether it's good or bad, I wanted to mention a couple of things that I meant to further clarify in my last episode regarding if your policy were to become taxable, and also regarding the structure of the policy. I wanted to add that if you were to MEC your contract, the death benefit does remain income tax free. It's just that during your lifetime, if you MEC your contract, in order to access the funds, the earnings would be taxable, whether you are accessing those earnings as a loan or as a straight withdrawal. So MECing the contract just makes it taxable no matter what, except for the death benefit. And another thing I wanted to clarify is that when we are building policies for IBC, we are snuggled right up next to that MEC ceiling, meaning that even putting one more dollar into that contract could cause your policy to become taxable. Because remember, when we put too much money into a life insurance contract and don't have a high enough death benefit, the IRS no longer sees that as life insurance, but instead, just a really cool investment. And all investments are taxable. Because when we are building these contracts, what we are doing is we are shrinking the death benefit on the contract. Shrinking the death benefit has a direct relationship to shrinking the cost of the coverage. Doesn't that just make sense? That by lowering your death benefit, that the cost would go down with it. And so when we're building these contracts, we're trying to lower the cost and make your dollars inside more efficient. So in order to lower that cost, we have to lower the death benefit. By shrinking the cost of the coverage, that means your money is working harder and earning more for you rather than draining out to that cost of insurance. So this is actually a good segue into the topic of term insurance today. There is a whole line of thinking out there that believes that you should only have term insurance, that you should buy term and invest the difference. In fact, this is where I started off in the industry, was a company that said you should only have term insurance and you should be investing the difference. That permanent insurance is bad. That whole life insurance is bad. Well, as I'm sure you know, I do not agree with that line of thinking. And being that I came in to the industry with a company that really drilled that into my head, it really had to be beaten out of me, this whole, term insurance, buy term insurance is the only way to invest the difference. Took me a long time to see the light, to see the truth. Although I do believe that whole life is the only type of life insurance that you should be banking with. There is a lot of noise out there, a lot of other popular insurance types of contracts, a lot of people out there saying all kinds of things. However, whole life is truly the only type that should be used for creating a banking system. I think I'll actually go into this topic some more in my next episode and elaborate on some of these other life insurance products and other things that's just out there on the market that everybody's talking about. I'm sure it's confusing for those of you trying to learn, and you're seeing all these different things and hearing all these different things, and a lot of them are not right, and a lot of them are not the best way to go. Some of these other types of life insurance products that other agents are talking about, they're calling it permanent coverage. That really, although it could become permanent coverage, it actually is not permanent coverage. That's why I want to get into it. So I think term insurance is great insurance to acquire for these reasons. First of all, maybe you can't afford the full death benefit coverage that you want for your family in whole life, because whole life costs more, and because when we're building these contracts, we are shrinking the death benefit down. So that means you may be putting as much money as you can into this contract, but we're lowering the death benefit, so you're not getting as much death benefit as you otherwise could with that premium amount if you were building the whole life contract differently, more of the traditional style way. So if your premium dollars will not end up purchasing as much death benefit as you would like to have in place to protect your family, then for sure, it's a good idea to acquire a term insurance policy as well. I mean, maybe you got to think about, what do I want for my family if something happens to me? What do I want them? What kind of protection do I want for them? Do I want them to be able to pay off the mortgage? Do I want them, my kids to be able to get their first car and go to college? Maybe I want to be including some cash for if I pass away, my spouse is depending on me for part of her retirement income or his retirement income. Because if you're working together, you're working towards a retirement and one of you goes before you save up all the money or whatever, then that becomes a part of the surviving spouse's retirement plan. So there's a lot of reasons why you might want to boost up your death benefit. And so you might want to add some term insurance to your overall insurance plan. Another reason is that maybe you are just super excited about infinite banking and you don't have the funds just yet. You're waiting for a tax return or maybe an inheritance or some other type of windfall. If that's the case, it is a great idea to lock in your insurability with a term insurance policy. If you're feeling good now, you're healthy, things are going well, you should lock in that coverage because you never know what's going to happen tomorrow. You just never know when something could happen unexpectedly, whether an illness or you get hurt and injured in some sort of way in a car accident or something. You just never know what could happen. So when you're doing good, you feel healthy, you feel like you're insurable, you should go through underwriting and lock it in with term policy, because these term policies can be convertible depending on the company and what kind of products they can be converted to. But you can convert those policies to whole life contracts. And I'm going to go into that more in just a minute. So locking in the insurability, definitely a good idea. And another reason, the third reason, is of course, if funding a whole life policy is simply just out of the question at this time of your life, or you're just learning about this, you're just unsure of this whole IBC thing, or if you even want to fund a whole life policy, but you understand that you should have coverage to protect your family, then yes, by all means, get some term. Some coverage is definitely better than no coverage. Your family will feel so much better knowing that they are protected. So a lot of times clients will pair up a term policy with a whole life policy, what I was just mentioning a minute ago. When I say that, what I'm referring to is having two separate policies. The whole life is so that they can start building up that cash value, building their banking system for financing the things they will need in the future or to purchase other investments, et cetera, et cetera. And then oftentimes we'll also acquire a term policy to make sure they achieve their death benefit goal for their family. Actually, for those of you out there who happen to be of Christian faith, there is a Bible verse, Proverbs 13:22, that says, "A good man leaves an inheritance for his children's children." So if this happens to be a goal of yours, life insurance is definitely a great way and a very easy way to leave an inheritance that can stretch to one or more generations. So as I just mentioned a few minutes ago, the super great thing about term is that when you are ready to grow your banking system, at some point in the future, you can easily convert portions of your term benefit or the full death benefit without any health underwriting required. And that's a big deal. So then if you were to become diagnosed with some sort of disease that would cause you to become uninsurable or maybe have a worse health rating than you did when you were younger, or, you never know what the health will do. And sometimes you can still acquire the coverage, but you don't have as great of a rating. And so you would retain that same health rating that you received on that term contract at some point in the future if you're wanting to convert that term insurance to whole life. So if you had a perfect health rating, it would remain a perfect health rating. You would get to keep that. For some reason, converting term insurance is often confusing. It's a confusing concept when I'm talking to clients about it. So let me give an example to help really make it clear. Let's say you purchased a term policy for $1 million in coverage and you received a Preferred Plus rating, which is the absolute best health rating. Of course, it's got a different name with different insurance companies, and a few years later, you decide you want to open a whole life policy. We would get together, we would talk about your goals for the policy and how you would like to fund your new whole life policy. I would then build an illustration according to your goals and funding desire, and the software would then spit out the required death benefit for the contract. A death benefit that allows you to be snuggled right up next to that MEC ceiling without crossing it. So you would tell me, or we would figure out together how much you would want to fund the contract now and going forward. So we'd want to look at your overall goals and what the plans are and how you see being able to continue the contract. And then the software tells me that required death benefit needed. And once we get that information back from the software, that's the amount of coverage that we would convert. So let's say you came to me, you wanted to fund with $5,000 a year in annual premium, or $20,000 or $100,000 a year. Whatever that amount is, we would only convert the portion of term death benefit needed to meet your funding goal. So if the funding that you desire to start with for your new whole life policy only requires a death benefit of, say, $250,000, then we would convert $250,000 of your term insurance to a new whole life contract, and your remaining $750,000 in term would remain in term. And then your price on that contract, on your term contract, would go down accordingly. But you'd be able to keep that at the difference of that $750,000 and then be able to convert it later, convert another chunk of it later. Or maybe you wanted to fund at a premium that was going to end up converting your full term contract. If that's the case, then you would convert the full term contract and then you would not have that premium anymore. It would just go away. So here's just an interesting fact about term. Term policies are actually the cash cow of the life insurance industry. The reason being that they only pay out death claims about 1% of the time. So, a lot of people hate term because they think I'm just throwing my money away. It's, I'm just putting this money in and I'm not going to have anything for it. But remember, you can lock in your insurability. You never know if you're going to become uninsurable. And it does give you that peace of mind with your family if you want to have a decent amount of protection for a certain period of time, and allows you to convert too later when you're feeling more ready. So that's why some people will tell me, I don't want any term. I don't like term. I know that I'm just spending money and I'm not going to get anything back. However, as I mentioned, I do believe that term policies have their place. If you are unable to begin a banking policy and you want to lock in your insurability, or if you would like to simply increase your total coverage for the sake of protecting your family, or you simply want the ability to convert portions of term coverage as the years go by when you're able to fund new contracts to grow your banking system. Another thing that often confuses people when I start talking about term, when I'm talking about a term contract, is that they'll start to think I'm referring to building term into the whole life contract, like I'm building it inside of the whole life contract, because I know there's a lot of information out there and people are saying all sorts of things and how they build contracts. And so they'll think that. And that is definitely possible and something I do when it makes sense for your goals and the premium you want to fund. Just like anything, I would say that it's not the perfect fit for everyone. Adding a term rider inside of a whole life contract has its pros and cons, and it just depends on what your goals are and what you're trying to achieve. So this will be a topic for another day as well. And so this wraps up what I have for you today. If listening to this podcast has you wondering, I wonder how this banking thing could work for me, please reach out to me at Valerie@alphaomegawealth.com. Thank you for listening in. Have a wonderful week.
This is thepodcastfactory.com.